India has witnessed two of the biggest reforms that we could have expected. One, demonetization, and two, GST. I think these are such long-term reforms that there could be some frictional costs in the short term, and possibly some section of the market is feeling that effect of frictional cost, and hence believe that things have not normalized yet. But in our view, if you look at the consumption levels that are there in the country today, the kind of improvement in consumer sentiment, we believe that the frictional costs are only in the short term, and things will start improving as we move forward. And we are not negative on the Indian economy as a whole. Yes, on the market, yes, valuations are on the higher side. That caution needs to be exercised by every investor. But overall, we believe that one needs to be still constructive on Indian economy as well as Indian markets.
Harsha, if we talk of the automobile sector, the numbers are pretty good, but valuations are something which we can talk about. Numbers from the other high frequency data like auto or like aviation numbers are good. What are your thoughts on the valuations versus the month-on-month or quarter numbers which these two sectors are giving out?
See, clearly auto sector has been giving out almost double-digit growth on a monthly basis. Until maybe a few months back, it was only the urban consumption which was driving auto demand. But now we believe after two reasonably good monsoons and also normalization post demonetization and GST adverse impact, even rural economy has started to deliver in terms of numbers. So both rural as well as urban economy have been delivering on the auto side. You look at any sub-segment of auto, almost all of them have been growing at a decent double-digit volume growth trends. And similar has been the scenario on the passenger traffic for airline industry, for example. There has been no let-up. You go to any airport in the country, yes, there is a issue in terms of the infrastructure, but you will see a lot of crowd everywhere trying to travel from one place to another. So overall, there is enough consumption improvement that has happened in the country, and these trends are here to stay.
Recently, a data point which was released, which is the tractor sale data, seem to be hitting a 4-year high now. Almost 6.5 lakh tractor data is being released, spoken about. We are almost there. Last seen in 2012 to 13 time, that particular period, because of good monsoon, etc. And also tractor sales, usually rural sales pick up around Diwali season. What is your sense of stuff which you may be gathering from research or on-ground channel checks as far as the rural part of the country is concerned?
In fact, tractor segment has been showing significant traction in terms of overall volumes for almost a year. Even demonetization really didn't affect tractor sales that much. Maybe for a couple of weeks, yes, it did get affected. In terms of GST transition, again, it didn't make a real adverse impact. So overall rural economy, especially after two good monsoons, has started to spend on consumption, and tractors is one of the necessities that rural economy will require. And there is a hope that agricultural production will also improve based on the two good monsoons, and hence people have started to spend on tractors. Within auto segment, definitely tractors have seen a very strong recovery in the recent few months.
So Diwali is all about wealth, talking of how we are doing on various asset classes, how we have done in our own individual portfolios. The number which is being spoken about now from the SIP side is the 5,500 crore number, which is crossed now on a monthly SIP basis. Other avenues, PF, etc., adding more. Do you see the continuation of this SIP trend for your own industry? Because that is also people are wanting to participate in this wealth creation journey in the markets. Real estate, gold is not doing that well.
Clearly, as we meet more distributors, investors, we get a feeling that most of them still have not been fully allocated or reasonably allocated into equity. So the trend of making monthly systematic investments into equity will continue. I mean, what are the numbers that we are talking about today? Even today with 5,500 crores of monthly SIP numbers, if you look at the total number of folios in the industry, that's about 1.5 crores. And assuming that each individual has 2 or 3 multiple folios in various fund houses or in a single fund house, you are talking about only 40 to 50 lakh individual investors making systematic investments even today. That's a small amount of what our population is and what are the population which can actually go and invest in equities. So to that extent, I think the penetration levels, even after such a structural change that has happened in the SIP flows, is only marginal. And as you rightly pointed out, some of the physical assets, for example, real estate or gold have been losing sheen because of taxation impact or because of some of the reforms that we have seen in our country. So incrementally we expect more of physical assets to shift away and move into financial savings. And even within financial savings, equity continues to be one of the best asset classes for any inflation hedge. And if you look at across the board within financial savings that are available, clearly equity happens to be one of those asset classes where for long-term wealth creation, it is definitely one of the best investment options.
Right. Harsha, let me also play devil's advocate for a moment. There is supply coming in from FIIs, heavy selling for some time now. There is supply from new paper from the government side for PSUs, supply from promoters for new IPOs is also there, and still market is managing to do what it is actually doing. Is it also time to be slightly cautious given the way we have the returns, the kind of returns we have under the belt last year on a YTD basis, etc.? Is it also be time to be cautious a bit?
See, volatility is inherent to equity markets. Somehow for the last 1 year, despite some of the adverse impact of some short-term events, we have not really seen volatility increasing in the market. In fact, globally we have seen volatility reducing in equity markets. One should expect that at some point of time the volatility will return to the markets, there will be ups and downs. But if you are looking at a long-term wealth creation avenue, equity still happens to be one of the good investment classes. As far as an investor is concerned, if he is making prudent asset allocation, not getting a left out feeling when the markets are running up or fearing too much when the markets are falling, and maintain asset allocation which is prudent, then I think from a long term perspective it makes sense to even invest at current levels. But one obviously has to maintain caution and not chase momentum.
Sure. So last question to you is, for our viewers, all the sectors which you have scanned in terms of earnings potential versus valuations, and even some of the new sectors which are seeing representation, insurance and many other, if you were to highlight for our viewers, watch out for one particular sector in terms of its potential for creation of wealth over a next 2 to 3 year period, what would that theme or subsector would be, or some indication of the kind of pocket to watch out for, which our viewers should watch out for?
Definitely oil and gas sector, especially the gas utilities and the oil marketing company seem to be in a very sweet spot. The earnings growth is reasonable. It should be in the mid-teen range, which is more or less in line with market or slightly higher than market. Whereas if you look at the valuations, they are still in many cases lower than market valuations. So to that extent, oil and gas sector seems to be a sweet spot as of now. And also there is a supportive government policy. Government has moved out of oil and marketing companies in terms of pricing their products, so which has been a long time reform that India was looking for, which has already happened. So it's market related pricing and profitability that will drive some of these companies. On the gas side, there is a supportive government policy because government is looking for alternate fuels which are cleaner, greener in nature. So to that extent, I think there is going to be a steady demand for natural gas in the country. So anything that is linked to natural gas transmission, distribution, etc. should be a sweet spot to look at. And as far as some of the new industry segments that are getting listed, definitely insurance seems to be one big area where in terms of penetration, our economy has not seen really any pickup in terms of insurance penetration in the country, and it's in the nascent stages. And if you believe that investors and the population will become financially aware, then obviously the uptick in insurance industry will continue for a longer period. And that is one industry where from a 5-10 year perspective, you can make really good amount of money. But then again, you will have to be stock specific even within that industry depending on growth and valuations.